Hello everybody, this is Lara with your weekly video for US oil for the trading week ending Friday 10th of December 2021. Last week I'd expect a little bit more upward movement for the short term to end in a target zone 70.63 to 72.44, and the high for the week so far was at 73.32, just 0.88 above the target zone. After that, prices turned lower and there's a bearish engulfing candlestick pattern at that high, so it looks like that bounce is most likely over. And so I am expecting overall downward movement to most likely continue next week. A target for support eventually will be 38.95. Elliott Wave analysis first, classic analysis last. The bigger picture at the monthly chart now expects essentially a bear market for US oil in its early stages, which will be labelled Cycle Wave 2. Cycle Wave 1 begins here, it's a 5-wave impulse. I'm expecting a 3-step back pattern. Following 1 is 2, and then 3, 4, 5. I'm expecting Super Cycle 3 will unfold as a huge, simple impulse, most likely, with 1, 2, 3, 4, 5 having to meet all of those core Elliott Wave rules. This week, prices found support at the upper edge of this channel and bounced up from there. If we see this trend channel breached and price on the weekly chart level closing below it, then support may be breached, and then we may expect to see an increase in downward momentum. And so draw this channel on the monthly chart from this high to this high, place a parallel copy on this low. I'm expecting Cycle Wave 2 may last a year, possibly a little bit more, and it may not move beyond the start of 1 below 10.24. Let's take a look at Cycle 1 from this low here, this point here. Primary 1, 2, 3, 4, 5 completes a 5-wave impulse for Cycle 1. We can then draw a channel around Cycle 1 from primary 1 to 3 with a copy on 2. That's Elliott's first technique. We see an overshoot for the middle of the third wave. This is the strongest portion of this upward movement, the third wave within the third wave, and this looks really typical. This tells us that the trend channel is most likely drawn correctly. There's an overshoot at the end of the fourth wave. That's okay. Fourth waves aren't always perfectly contained within those channels. Now the channel is clearly breached by last week's downward movement, and this week's small bounce. These two candlesticks are fully below and outside this trend channel, giving us some confidence that Cycle Wave 1 is most likely complete and Cycle Wave 2 is most likely in its early stages. Cycle Wave 2 may be expected to last from 1 to several years. That's the normal duration for a cycle degree wave, and it may not move beyond the start of 1 below 10.24. Along the way down, a new low below 61.74 would give more confidence in this wave count, as at that point the alternate, which we'll get to next, would then be invalidated. Cycle Wave 2 would most likely subdivide as a zigzag. They subdivide 5, 3, 5, and within a zigzag, Wave B may not move beyond the start of A above 85.41. Let's take a look at how Cycle Wave 2 may be beginning at the daily chart level from this high, the end of Cycle 1, this point up here. From this high to this low, this looks like a fairly good 5-wave impulse. This may be intermediate wave 1. From this low to this high, this looks like an expanded flat, A, B, C. This could be intermediate wave 2, which may have fallen a little short of the lower edge of that channel, which we've copied over from the weekly chart. If 2 is over here, then 3 should have begun, and it should exhibit an increase in downward momentum. Within intermediate 3, no second wave correction may move beyond its start above 73.32. Alternatively, it's possible to label this differently. This high here is this point here. Now my first wave count has labelled this minor 1 and 2. This is the same, and then I've got 3, 4, 5 ending at this low. The second daily chart has 1, 2, and 3 ending down here, 3, 4, 5. If intermediate 1 ends at this low, not this low, then intermediate 2 may be an incomplete zigzag to be labelled A, B, C, and subdividing 5, 3, 5. If this is correct, then we may see a little bit more upward movement to complete minor C, which could see intermediate 2 in close to the 0.618 Fibonacci ratio of this intermediate 1, which is from this high to this low, which is about 76.64, which could see intermediate 2 test resistance at the lower edge of this big channel, which we've copied over from the weekly chart. So if we do see a new high above this week's high, which is on this candlestick here, then look out for more upward movement and expect the bounce may find next resistance about 76.64. Intermediate 2 may not move beyond the start of 1 above 85.41. At the weekly chart level, if we move the degree of labelling within primary 5 down 1 degree, instead of primary 5 being over here, it's possible only intermediate 1 and 2 were over within primary 5. The target remains the same for primary 5 to reach equality in length with primary 1. This wave count has a reduced probability and it just doesn't have as good a look as the main wave count, but it is technically valid. It'll be technically valid while price remains above 61.74. But because intermediate 2 may not move beyond the start of 1 below 61.74, if we see a new low below that point, this wave count would be invalid, which would add confidence to the main wave count. This wave count has a reduced probability, so I'm only going to show it to you on the weekly chart again this week. Okay, take a look now at classic technical analysis. At this high here, these three candlesticks make an evening doji star, coming with double bearish divergence between price and RSI after ADX reached not very extreme, but extreme. The ADX line was above both DX lines for the upward trend. Given those conditions in a bearish candlestick pattern, we were expecting downward movement. It doesn't tell us how long and how deep to expect downward movement, but considering the bearish divergences over a reasonable distance in terms of time, then I would expect more downward movement to follow rather than just this, which would tend to support the main Elliott wave count. Volume was pushing price lower for this last completed week. This week, the volume at the time I'm publishing this isn't complete, but it looks like it may be exhibiting a lack of support from volume for this upward movement within this last week. On balance, volume gives us no signal. We've been over ADX, now it's in neutral territory, room for price to continue falling before it reaches oversold. ADX is indicating a downward trend at the weekly chart level. RSI is neutral and ATR increasing as price falls is normal behaviour for this market. Here's a bounce. We get a hammer candlestick pattern here telling us to expect a trend change after this downward movement. We're getting a bounce here, and now we see a bearish engulfing candlestick pattern that it doesn't have support from volume. That doesn't necessarily mean we shouldn't take it seriously, because bearish candlestick patterns don't necessarily need support from volume for confidence, because price can fall of its own weight. That's a shorthand way of saying price can fall due to a lack of activity from sellers, just as it can from further activity. Price can fall due to a lack of activity from buyers, just as easily as it can due to activity from sellers. When there is a lack of activity from buyers, we see low volume and price can still fall quite a long way with quite a lot of strength. That may be what we're seeing here. Look out for support at 68. No signal from ADX at the daily chart level. The prior downward trend reached extreme, but only just. ADX is now declining, indicating at this time frame, at this point in time, no clear trend. RSI neutral, stochastics neutral. That's all from me this week with your oil analysis. I hope all our members are looking forward to a fabulous weekend.